I record. I'm recording the class, and in fact, thank you for asking that, because I meant to click record when we started and I didn't. So thank you. So what I'm doing is recording the class, and then I plan to put the recording, you know, where it says Zoom call materials for today's date or whatever. I plan to embed the link of the recording there. I'm going to try and load the recordings into YouTube, but I'll put the YouTube link on Blackboard, so you don't have to go try and find the link.
Perfect.
If
Thank you.
I don't know if, I mean, if you can record, you can go ahead and try, but I'm definitely also going to be recording.
Thank you.
All right. Any other admin or other questions? Okay. So I guess just from my admin perspective, if you can, or if you would prefer, just please mute yourself if you're not planning to talk, so that you know, whatever ambient noise is going on in people's homes, we don't have to try to speak over that. When you do want to speak, you can interrupt me obviously at any time. I sent out yesterday morning a link, an email with all the documents that we need for today. If you didn't get that email, or if you don't know where those documents are, I'm just going to share my desktop now so that I can show you where to find them. Okay, so at this time you should be seeing me sharing my desktop. Can someone confirm?
Yes.
Yes,
Okay.
dear.
Sorry, I forgot everybody has to unmute themselves to confirm. Sorry.
Yes.
So yeah, on our Blackboard, you've got something called Zoom call materials. This is the office hours ID, and then you've got all the documentation that we'll need for this week. So it's got, you already have the chapter 12 notes and the partnership exercises. The solutions were also already on Blackboard, but I just put them all together here. And then after that, obviously we start chapter 13. So we have the chapter 13 notes, the exercises for chapter 13, and also the solutions for the chapter 13 exercises. Okay.
Okay.
Okay. So yeah, so if you don't have it open yet, or you're still trying to find stuff, I'll give you a minute to just navigate through that, and then I'll start. So, you know, just the way I thought we would do this, kind of the way we would do it in class, which is I'll go through the theoretical material with you guys, and then I'll do an example to kind of demonstrate, you know, how the example would go, and then you can try to do another example on your own, and then we'll go through the solution. So basically, I don't want to just be, you know, rattling off stuff and just quickly going through the material. I'd like to just make sure that everybody's actually following along. So the where I'll just kind of recap, because I mean, after things have happened over the past few days, I feel like, I'm sure, you know, partnerships were not necessarily at the top of everybody's list of priorities. So I'll just recap for us where we left off, and then today we'll tackle liquidation, which will help you to answer the last question in your deliverable, and then we'll move on to corporations. So if you recall, in our previous meetings, we obviously said that partnerships are it's two or more individuals coming together to form a company or a partnership, or whatever format they might have, you know, LLC, LLP, and so on. And we said that our work was going to be divided up into 4 parts. The first one being forming a partnership. And over here, I know that a few people had questions about the journal entries when you were working on Wiley to do with partnership formation, because the way they asked for it was a compound journal entry, meaning that they wanted, you know, like basically two partners' contributions together in one journal entry. I'll also just say that you have to remember that all the assets go in at fair market value or fair value, not at the cost or book value. And also that, Wiley is quirky in that they always want all the debits to be listed first. So you want to make sure to get your debit accounts together and put those first and then the credit second. With a compound journal entry, we're just saying that, for instance, two partners are both giving cash. So you're not going to have two entries for cash. You're going to add the cash amount together and make one account for cash and put the total in like that. Two partners may give equipment. You look at the fair value of each contribution, you add that together, and that's what you put into your journal entry. You don't make two separate equipment accounts. And the way you figure out what a partner's capital account should be is that you add up all the assets that the partner gives, subtract any liabilities or any contra assets, and that should be the total of the partner's capital account. And again, stop me at any time if you have questions. We can go into this more also in the office hour at 1 o'clock with the specific examples that people had. And so the second piece that we did was dividing net income and loss. You may recall that it was, salaries, interest, and then dividing the rest based on some type of ratio, which we discussed at length, right? The different fractions and so on that could be used. And then there was also a journal entry attached to that when we did the ratios, eventually figuring out how much money each partner was supposed to get. We would debit income summary for the total net income and then credit each partner's capital account for his or her share. So that's this bullet over here. Oh, I need to change the settings on this document. Anyway, so then we did partnership financial statements. You may recall that the financial statements were predominantly the same, income statement the same, except for the allocation of income. Then you have the balance sheet the same, except for having two or more partners' capital accounts. And then, other than that, it's all the same. So that brought us to liquidation of a partnership or ending the partnership. So, if people have heard of this notion of a liquidation, anybody want to talk us through what a liquidation might mean?
Maybe we're all a little lost.
You're a little lost
about liquidation.
Oh, okay.
Yeah. Everybody was just really quiet.
Everybody, it's okay. It's like super weird to be talking into I'm talking into like the air, and we'll get into a rhythm where we start to feel like we're actually together. So don't worry.
Liquidation is basically selling all the assets and paying all the liabilities.
Yeah.
And sharing whatever is left between the partners.
Yeah. So who was that? Daya?
Yeah.
Yeah, Daya, thank you. So Daya is saying that's correct, Daya. Liquidation, you've seen it on unfortunately, I'm sure on the store windows at times where it says liquidation sale, everything must go, things like that. You are basically liquidating, meaning turning into cash any of the assets that the company has. So we're talking about all non-cash assets need to be sold to get cash. All right, that's the first piece. And then you're going to pay off any liabilities. Remember, before the partners can get any money themselves, the liabilities have to be paid off. The creditors will always be paid first. And then after the liabilities are paid, you can distribute anything that's left over, right, to the partners. And I mean, why would a liquidation happen? Maybe the business is ending, maybe for good or bad reasons. There might have been a death of a partner. There could be a bankruptcy, which would be a not so great reason, you know, for the business to end. So that's the circumstances around liquidation and why it may happen. At the end, when the liquidation is happening, it's important to note that we're basically left with just balance sheet accounts, because all the income statement accounts, we've already transferred all the net income or net loss to the partners. There's no revenue and expense accounts left over. We're basically closing down the business. So we only have assets, liabilities, and, you know, the owner's equity accounts left. So with liquidation, there are 4 steps that we have to follow, and we follow them basically in this order. There isn't really much room to change the order because of how the flow is in terms of the money. So the first thing is to sell all and it's non-cash assets. Okay, you obviously can't sell cash itself, so any cash that's on the books will remain there, but then anything else that's non-cash assets you will sell. So who's going to take a wild guess here? What types of things might be non-cash assets?
I'm not really sure, but revenues?
So revenue is not going to be an asset. Thank you for taking, who is that speaking? Thank you for taking a shot. Okay, Tuba. So revenue won't be an asset. The revenue account would have already been closed to the partners because revenue is part of net income or net loss. So do you want to think about accounts that are assets, something that you own or control that you're going to get future benefits from? Do you want to try again?
Do you mean like supply?
Accounts receivable?
Accounts receivable, yes. Did someone else say something also? Tuba, did you say something?
No, I didn't. I'm looking back on my notes.
Okay. Okay. So I heard accounts receivable. What supplies? Someone said, I think I heard that. You're totally on the right track. Any other types of assets that would be non-cash?
Equipment, land.
Yes, equipment, land, etc. So when you think about a balance sheet, the things that are under assets, current assets, things like accounts receivable, prepaid, you know, expenses, supplies, and so on. And then you also have the other property, plant, and equipment, so land, equipment, vehicles, etc. Those are all non-cash assets. So if you just imagine the situation in the partnership, basically they are trying to sell anything that can get them some money, right? Because eventually they have to get rid of all their stuff in order to convert it to money. You can even think of this for yourself. Like if you were suddenly moving somewhere overseas, but you couldn't take any of the contents of your apartment with you, but you needed to take money with you, you would basically be liquidating all your possessions. You would be selling them all in order to get cash. So that's what we mean about the sale of non-cash assets. And it's possible, because you're getting rid of stuff that you bought once upon a time, that you may either have a gain or a loss on the sale, right? So if I bought a piece of land for $10,000 and now I sell it for $12,000, I've made a gain of $2,000. And similarly, there could be a loss. So you know, we're not just necessarily going to sell these non-cash assets for exactly what they are recorded at on the books. Therefore, there may be a gain or a loss. So that's the first step. Any questions at this point?
I know that when I went to the tutor center that I had trouble doing this, but then he told me if you're able to write everything out orderly, like like just like a journal entry, you put it separate as a cash, non-cash, and equals liability plus whatever partner and their ratio, then you just line up everything and then put everything in order.
Yeah, I think the point that you're making is important. With the liquidation, you have to be incredibly systematic about how you do the journal entries because, like the first step, the sale of the non-cash asset impacts the second step, and both of those. And even step 3 will impact the final distribution of cash to the partners. So we kind of can't like just jump around and do whatever we think we know how to do, because the answer of one part actually impacts the next part. So yes, do be systematic. Um, so once you've sold, and again, guys, you can just interrupt me at any point if you have a question. You don't have to wait for me to ask for questions. So once you've sold the non-cash assets, you allocate any gain or loss that may have been made on that sale. You have to allocate to the partners based on their income ratios. So basically what we're saying is, if we made a gain or loss, because the partnership is liquidating, we can't just let that gain or loss hang around. We have to give it to the partners immediately, whether it's, a positive, which is a gain, or a negative, doesn't matter. It has to be allocated to them because the partnership is shutting down, and it has to be allocated based on their income ratios. So in a question, obviously you'd be given the ratios and you would use those to allocate. Remember that if there's a gain, it's an increase to the partner's capital, so it would be a credit. And if there's a loss, you're going to decrease the partner's capital, so it would be a debit. And again, I'll be doing an example with you, so don't panic if you don't fully follow what I'm saying yet, but please do ask questions, once we start doing the examples. So those are the first 2 steps. And then the third step is paying any liabilities that we have in cash. So if we have accounts payable or notes payable or mortgage or something, we have to pay that off first before the final step, which is to distribute the cash to partners. So when you have a liability is normally a credit balance. In order to get rid of a liability, you are going to debit the liability. And then the last piece here, distribute the remaining cash to partners on the basis of their capital balances. So this is like if you have a bank account, right, and you don't want to do business with that bank anymore. When you close your account, they will pay you out whatever the balance is in your account. And for the partners, it's the same. At the end, we calculate their capital balances and they get the amount that is in their capital account, which hopefully corresponds with the amount of cash that we have left, right? That's how we can check our work, because whatever we pay out to the partners should be the same as the cash that we have left. I'll open the floor now to any questions about the theory before we do some examples together.
Yes, I just wanted to let everybody know, especially doing the homework, just have to be careful when they convert the non-cash into real cash. Just make sure that, like you said, to follow the steps, you have to make sure that is there a gain or loss. Because if you miscalculate that, everything else will be wrong.
That's right. Any other questions?
What if you don't have enough cash to pay all liabilities?
Yeah, so I spared you guys that horror show. What if there's not enough cash, right, to pay off everything? So, well, first of all, hopefully for most of these questions, there's enough cash to pay the liabilities, but there may not be enough cash to pay each partner the balance in their account, or some partners had such a small balance that they actually have a deficiency, meaning that they end up in a negative position. After all the losses and things happen, they're actually negative. Then people have to pay in. They have to pay money into the partnership in order to square everything away. Does that make sense?
Thank you.
Yeah, it's like having a bank overdraft, right? If you go negative on your bank account, you're going to have to pay the bank the money. All right. Any other questions? Okay, so with that being said, I think what I'll do is I'll actually do the quote unquote more difficult question as the example that we'll work through together. So this is example 13, and then the other one, you know, the, I guess, less difficult or whatever one you guys can do to practice here. So I think everyone can still see what I'm doing. If for some reason you can't, you can refer to this document anyway. Remember, it's on Blackboard, and you also have it from our class when we were still meeting in person. So I'm looking at example 13, which is the final example in the partnerships work. And I'm just going to read it through. It is a liquidation example. So ACE partnership has the following balance sheet, right? So you remember we said at the time of liquidation, there's only going to be balance sheet accounts left over. There's no, you see here, there's no revenue, no expense, nothing like that. So we see that under assets, they have cash. So cash obviously will not be disposed of. Remember, we only sell non-cash assets. So they've already got 5,000 in cash. Accounts receivable of 15,000. So someone tell me, can you sell accounts receivable? Anybody want to take a wild guess? Can you sell accounts receivable?
You could convert it, right?
You can convert it, yeah.
So that's
You can
as long as you convert it, that's mean you can sell it. It's
yeah,
like
so basically what happens is, or what can happen is a company can actually approach what they call a factoring company factor. So it's like, it looks like that. They can factor the accounts receivable, and that means that they will sell, you know, this accounts receivable of 15,000, maybe not for 15,000, for something less, because the company that's buying it would have to try and collect everything, thereby making some type of profit. But you can sell accounts receivable. It's just called factoring. So inventory, yes, they can sell that. Equipment, this is all costs, right? The cost of the equipment was 35,000. What do you think happens to, and let's have, you know, multiple people answering here. So I'm going to start calling on people at some point, so beware, right? Accumulated depreciation. What happens to the accumulated depreciation when we're liquidating?
you don't include it.
No. What do
Oh,
you
you
guys?
only do the fair market. You only do the fair market value.
I'm gonna say no again. Does somebody else want to try? What do you remember from accounting one, guys? And don't let Jimmy just bail you out. Try. It's okay if the answer is not correct. From accounting one, when you sold assets, when you did a disposal,
Deducted from equipment.
you did okay, kind of. But so what balance does accumulated depreciation have? A debit or credit balance? I'm gonna ask someone. You're gonna hate me now. Kaylin, are you there? Do you know whether accumulated depreciation has a debit or credit balance?
Yes, depreciation.
Accumulated depreciation.
The
You can also pass on the question. Putting you on the spot.
Is it credit?
There comes your what do you think, Kaylin? I heard a voice in the distance, but do you want to go with what was said? Do you think it's a credit?
Yes.
Okay, so it's a credit balance, right? So accumulated depreciation as a credit balance, it's connected to the equipment balance, which is a debit. When we sell the equipment, the accumulated depreciation and the equipment are forever joined at the hip, meaning that if the equipment goes, the accumulated depreciation has to go. So how do you get rid of a credit balance? You will have to debit, right? So that the balance can go down to zero. So we'll see when we do the sale of the non-cash assets that the accumulated depreciation will also be eliminated. This company has notes payable and accounts payable, which means they will have to pay off all this money, right? A total of $31,000, and hopefully they have that money available to them. At the time when they're getting ready to liquidate, each partner already has some money in their partner's capital accounts, and so that amount will change based on whether we have a gain or a loss on the sale of the non-cash assets, and it will also be impacted by the fact that we have to pay off the liabilities. So obviously you can see the balance sheet has to balance, it does, so we can move on. It says the partners of Ace Company agreed to liquidate the partnership on the following terms. The partnership sells its non-cash assets to Jackson Enterprises for $75,000 cash. So non-cash assets, all these things have to go, except for cash, obviously. All these things have to go, and they were sold for $75,000 cash. So bear that in mind when we do the first step in the liquidation. And then the income ratios of the partners are 3:2:1 for Arnett, Carey, and Eaton respectively. So this looks confusing because it's like, how do we figure out the ratios over here? But remember, we said we add everything together. So 3 + 2 + 1. Okay, let me just save this because otherwise this thing's going to keep doing that. Is 6. So our net is going to get 50% because it's 3/6, right? Carry is going to be 2/6, and Eaton is, and Eaton is going to be 1/6. So that's how we'll do the ratios, right? Again, you add up them. If it's not obvious that, because you can't say 30%, 20%, 10%, because that doesn't add up to 100%. So you have to add up the proportions and do it as a fraction or something along those lines. Questions up to here?
Professor, so you said you add 3, 2, and 1.
Yeah. Because you're trying to see what's the total. So if someone's getting 3, you're asking 3 of how much, right?
Right.
Because you can't just say I'm getting 3. It has to be 3 out of, and so it's out of 6 because together everything is 6.
Okay, got it.
Okay, dokes. Anything else? All right. So we prepare the journal entries for the liquidation and then prepare each partner's capital account. So we'll just do T accounts for part B, showing all relevant transactions. So if you go back to, the theory, remember we follow these 4 steps. The first step is to sell all the non-cash assets. So let's just do that. I'm going to go into a blank document, and you can do the same. Just going to make it a little bit bigger. And so we're doing step 1 now, which is the sale of the non-cash assets. Again, you don't have to write out step 1 or whatever when you're obviously on Wiley and so on. I'm just trying to make sure that you guys see where I'm getting this information from. So if we toggle back to the question, we sold all the non-cash assets for $75,000 cash, which means we received cash of $75,000. Cash is an asset. It increases on the debit side. Therefore, we have to debit cash for $75,000. All right. Now you have to get rid of all these non-cash assets, right? So you can just go down the line, but I'm going to follow, because of the Wiley business where Wiley is expecting all the debit accounts to go first. I'll start with accumulated depreciation as we discussed, right? Accumulated depreciation has a credit normal balance. When we are getting rid of the account, we have to debit. So accumulated depreciation, because the equipment is being sold, the accumulated depreciation account also has to decrease. And again, this is a decrease. I'm taking the 0 questions as acceptance that I may be correct, okay? Accounts receivable, inventory, and equipment are next. These accounts have a normal debit balance. In order to decrease a normal debit balance to zero, you have to credit the account. So we will have to credit each of these accounts now to show that we have disposed, right? That we have gotten rid of these accounts. Remember, you're kind of in the opposite world now. When you're selling the stuff, your journal entry is going to be, you know, the opposite of what a normal balance is. So inventory is normally a debit. To get rid of it, you have to credit. Equipment is normally a debit. To get rid of it, you have to credit. And notice that we're not concerned here with trying to figure out what is the fair value of the equipment or anything of that nature, because remember, the 75,000 that you were given, that is what the market is saying all the stuff is worth. All right. So that's, you know, that's what people are willing to pay you for all of the non-cash assets that you are disposing of. Does this journal entry balance? Somebody?
Understood.
No, right?
We need to add the gain now.
Yeah, so something is wrong because we've got a debit of 83,000 and we've got a credit, right, of 68,000. If you look at your non-cash assets, if you have to add up all the numbers, you see that it adds up to 60,000, because remember, the cumulated depreciation is a subtraction. So that must mean that in order to balance this journal entry, we need 15,000 on the credit side. I'll repeat. If you don't know whether it's a gain or a loss, your first point is to check to see whether the journal entry balances. You know, you've got 83,000 on the debit, but you only had 68,000 on the credit, which means you need another 15,000 on the credit. So now you're asking, well, is this a gain or a loss? Just remember that gain is a credit balance, okay? And a loss is a debit. So again, a gain is a credit balance. Loss is a debit. So if you really are struggling to know whether it's a gain or a loss, if you remember this rule, a gain isn't revenue, but it's like revenue. It goes up on the credit side. A loss goes up on the debit side, almost like expenses. Questions on how I arrived at the $15,000 gain?
Yes. So can you repeat that step? How you got the 15,000?
Yes. So I'm gonna write it here on the debit side. Who's talking? Is it Tuba?
Yes.
Yeah. So Tuba, how much are we adding up to on the debit side?
83.
Yeah. So debit side is 83,000. Before I put the gain in, how much are we adding up to on the credit side?
60?
No. Look here on the, you've got accounts receivable of 15, inventory of 18, and equipment of 35.
Oh, so you're adding 15, 18, and 35.
Yeah, I have to, because that's what's on the credit side.
So
Okay.
yeah,
8,000, right?
68, correct. So the gain here, whatever is left over, right? We need to balance. Let me use better terminology. To balance, we still need 15,000. And because we need a 15,000 credit, and because it's a credit, it becomes a gain.
Okay.
How's that? Bit
Yes.
better?
Yeah.
Yeah.
Can we have an example when it comes to debit?
Yeah, it's just gonna do that. You're in my head, man. I love it. Okay, so why don't we do let me see how I can do the debits. Why don't I change the journal entry? Okay, this is no longer this example. This is just an example of a loss. Okay, so please be mindful that this is not our, don't add this as our current information as well. So what if I said that we only received 50,000, right? In cash. You guys with me?
Yes.
This
Yes.
is assume, okay? Not, this is not coming from anywhere in the material. So we assume now that we only got 50,000 in cash. Everything else is staying the same. We good? Same process, right? You're saying what is on the debit side? 58. What is on the credit side? So same story, right? 68,000. Tell me if I'm going too fast here. So now you need to balance, right? To balance, you will need a 10,000 debit, and a debit is going to be a loss. And so if I want to be perfect with Wiley, I'll put I'll put the loss in above with the debit. So loss on sale of 10,000. Questions there? There should be at least one question here. Did someone not follow what I just did?
So basically, we're just doing everything reverse, just the last step.
Yeah, you're doing the same thing. You're trying to balance the journal entry. This is the classic approach with disposals, right? That you're always like you receive cash, you get rid of the asset, you get rid of the accumulated depreciation, then you kind of try to see, well, what did I make money? Did I lose money? And if you are really stuck, I can go into all the theory of how to exactly work this out, this gain or loss theoretically, but it's not really necessary because you can actually just find it out by balancing the journal entry, as long as you remember that a loss is a debit and a gain is a credit. Because some people will come to the correct amount and they'll even put the 10,000 on the debit side, but then they write gain because they don't understand, the difference between a gain and a loss. A gain is a credit like revenue, and a loss is a debit like an expense. All right?
Yes.
Anything else here, folks?
So just to make sure, this rule only applies in the liquidation when we do a liquidation, right?
What rule? The rule of how to calculate a gain or a loss?
Yes.
No, you can use the same approach to calculate to balance a journal entry to calculate a gain or a loss on almost anything.
Okay.
Yeah, as long as you are very, very strict and clear about the debits and credits and the balances of all the other accounts. If you balance the journal entry to find the gain or the loss, you'll get to the right answer for any disposal. It doesn't have to be a liquidation of a partnership. It can be a disposal of a piece of equipment. It can be, a disposal of almost anything. You'll still come to the right thing, right answer. Okay. So this is our gain in our current example, right? This is our gain, the 15,000. So now, as I said before, if we go back to, what the literature says, we are required to allocate the gain or loss based on the partner's income ratios, right? So that's the next step. Pardon me. So this 15,000 has to be split between the three partners based on, remember, it was 3/6, 2/6, and 1/6. Now tell me, is going to increase or decrease partners' capital account?
It's going to increase.
Do you guys agree? Is there at least one other person that is agreeing with that answer?
Professor, you're doing part B, correct?
I'm still in part A, doing
Part A.
the allocation of the gain between, I have 4 steps that I have to complete in part A before I can even get to part B.
Got you.
Okay. So a gain is going to increase partners' capital. All right. So I'm going to just shift this down and say step 2. So without going into a long-winded discussion, about partners' capital, I'll just say again, partners' capital, capital account, up on the credit side, increases on the credit side, decreases on the debit side. The things that increase capital are things like net income, in this case, this gain, and the things that decrease will be drawings, the paying out of the final balance, and so on. So the gain is a credit balance, right? But we're not allowed to keep this gain on the books because we are liquidating. So what will you do to a credit balance to get it down to zero?
Don't you have to debit 15,000?
Yes, thank you. You have to debit 15,000. So again, for anyone who may have missed that, the gain on sale was a credit balance. We just calculated it, but it's not allowed to stay in the account because we have to distribute it to the partners because the partnership is ending. So now we have to debit the gain on sale so that in the end, the gain account actually has a zero balance, which is exactly what we want because the entire gain is transferred to the partners. So now each partner has to get their share of the gain, right? So
50%, so she gets 7,500.
yeah, so our net capital, yes. So remember, our net has to get 50%, right? 3/6 of the amount, which is 7,500. I'm gonna give you guys like a minute to calculate. You don't have to shout it out yet. You can just calculate, say, on a piece of paper or whatever, what the other partners are going to get. All right, so our net is getting 7,500. Please calculate Carrie and Ethan if you haven't done that already.
$5,000 and $2,000.
Don't say anything yet. Remember, we're still counting down the minute. Just let everybody else try to make sure that they're following. And while you're working, I understand that the situation is hectic with whether people can get online and so on, but I just want to let you know that I am taking attendance on these calls. I have to have some type of attendance record because we still have to do all of our attendance verifications, all right? So I don't have to call out names because I can see your names, but if there's someone whose information I can't see properly, I'll just ask you who you are. All right, so you should have had enough time now. So someone was giving me answers, so go ahead. Whoever wants to call out the answers.
4,500.
7,500 is the first one. Am I
4,500.
hearing?
And then the last one is.
So are we getting? So we're saying 15,000 times 2/6, right?
Yes.
So 5,000.
Oh,
I don't know. I
5,000.
thought I had you say 4,500, which is why I'm just checking the math
But I
here.
might have pressed something wrong on my calculator. Sorry.
Probably. So again, if you missed that, it's the 15,000. Anybody who's missing what I'm saying, it's the 15,000 times 2/6. And then the last one is 15,000 times 1/6. So, and obviously all this has to add back up to 15,000. Otherwise the journal entry doesn't balance. So this is to allocate, you don't have to put this stuff in obviously on Wiley, but this is to allocate the gain to the partners. Someone is saying finally in the background there. I don't know if it's if you're talking to me. I don't think so. It might be someone's child who's talking. So that's the step 2. Questions on allocating the gain. Step 3 is going to be a lot easier than this. So I just want to linger here in case there are questions. Everybody's okay?
Yes.
Yes, yes.
Okay, so 2 people are okay.
Yes.
Okay.
Yes.
Yes.
Okay, great stuff.
Yes, yes.
Yes, yes, I love it. Okay, so step 3, really not as crazy as these others. Step 3, if we go back to what the literature says, you pay your partnership liabilities in cash, which means you're getting rid of the liabilities and paying out some cash. So the 2 liabilities that we have are the notes payable and the accounts payable, and those 2 both have credit balances, right? They both have credit balances. So because they're liabilities, the normal balance is on the credit side. So in order to pay them off, to get rid of them, we will have to debit each one separately and pay out cash, which is a credit to cash. So it's going to be debit to notes payable to bring the account balance down to 0, and that's 15,000. Debit accounts payable, again, you can't just add these together. They come from 2 separate ledger accounts, so they have to be shown separately. 16,000. And cash is an asset. When we receive cash, we debit cash, but when we pay cash, we credit. Okay, that's the rule. So don't think of credit as good and debit is bad or something like that. This is just the rule. The asset cash goes down on the credit side. So that's step 3, pay the liabilities with cash. All right, I'll move on to step 4, which is the grand finale. This is where, just to again go back to what the literature says, this is where we distribute any remaining cash to the partners, but it has to be based on whatever is left in, or whatever the balance is in their capital accounts. So at the moment, just after we've done all this stuff, we actually don't know completely what the capital balances are, so we'll have to calculate that. And so that's what we're going to do. So in a way, what I'm probably going to be doing here is answering part B of the question, which said prepare each partner's capital account. I'm going to answer that first, because by doing each partner's capital account, I'll actually be able to calculate the ending balance, and then I'll be able to know how much money I have to give to each partner. So I'll start with our net's capital account. I'm doing T accounts, all right? So, and again, all these answers are already up on Blackboard from before, but if you're taking notes, that's perfectly fine. So this is our net's capital account.
That's just step 4, right?
Yeah, but what I'm doing is I'm using the requirement of Part B. Do you see here that I'm doing Part B? I'm using the requirement of Part B where it asks us to do the partner's capital accounts to calculate the balance. I'm using that to help me answer step 4.
Okay.
All right?
Yeah.
So the first thing that I want to do here is see, this is, remember, debits on the left, credits on the right. So my first thing is to see what balance was already in our net's account. So if we go back to the balance sheet, we see that our net had $15,000 in their account already. Because it's a capital account, the balance will be on the credit side, because that's the side that the account increased. decreases. All right. So this is the, the prior balance. This is like the old, balance that was there before. Does anybody have any ideas of what I should do now?
Put to 7,500.
Okay, so yes, so we're going to start looking at what have we done in these different steps that impacted capital. So in step 1, we didn't mention the capital account at all. So this step isn't going to be posted to the capital account, right? But then when we come to step 2, over here, we see that we did mention the partner's capital account. So we will have to do whatever we did in the journal entry, we will do in the ledger. So 7,500 is being credited to our net capital account in the journal entry. So we will do the same over here. So we have a credit of 7,500 because of the gain. Questions there?
No.
So is there anything else? If we look at the step 3, does it say capital anywhere? No, right? So we don't have to post anything. So the reality is that all that happens in the capital account is the beginning balance plus the gain that this partner is being allocated. So what I'm going to do is total the account now to see what is the balance on this account, because this balance is what has to be. This is what we have to pay the partner in cash. Now, I'm going to ask you guys to go ahead and try to do Carrie's capital account. So Carrie is the next partner in line over here. So you go ahead and follow the approach that I did and take maybe 3 or 4 minutes and just do the capital account for Carrie.
Professor, I got a little confused with the part B. Is this part C now?
This is part B. So if you look at the question, right, I skipped over step 4 in part A, where I'm supposed to allocate the money to the partners, because I don't know how much money I have to give each person. After we did all these journal entries, I can't just give them 15,000, 17,800, and 1,200. There's some other things changed. So for me, it's most useful to first figure out what each person's balance is, and then I'll go back up and do the journal entry. I'm getting dead air, so tell me if I'm making sense or if you're still lost. It's okay if you're still lost.
So it's for
Hang on, who asked the question about part B? Let me just handle that first. So the person, I don't know who asked me that because I can't see everybody's names. Are you okay with why I'm doing the capital accounts now?
Can you hear me?
I can now. I couldn't hear you before.
For myself, yeah, I understand. Thank you.
Okay. And Jimmy, you were saying something, sorry?
No, I was about to just continue. So Carrie is
Okay, so yeah, so don't continue yet because people still need to do it. Let me give them another minute or two. You can go on with Ethan if you want to, all right? And then I'll circle back to you if you want to tell us what the answer is going to be. I'm just setting myself up. So guys, go ahead and try to do Carrie's capital account using the same approach that I did for our net. I'm just finishing the attendance and then I'll take the answer, okay? So just bear with me. Carrie's iPhone, is that Carrie Massillon? Massillon?
Yes.
Okay, thank you. All right. So Carrie's capital account, go for it.
I got 22,800.
22,800. That's correct. So talk me through it, whoever.
It's Tuba. So what I did, I took the balance that
Yeah.
was already given, which was 17,800, and the gain, which we got from the ratio, which was 2 out of 6.
Yeah.
That was 5,000, and when you
Yeah.
add it up, it got 22,800.
Correct. All right. Is everybody? Well, I guess just answer for yourselves. You're in agreement with hopefully. If not, ask me a question. This is what we have to pay Carrie when the time comes. So I'll do Eaton, put everybody out of their misery now, right? So balance 1,200, same story, right? The gain is 2,500. So Eaton's balance is significantly smaller. They are owed 3,700, and I'll give you an opportunity to write that down. Sorry. So who wants to tell us, well, people may still be writing stuff down, who wants to tell us what's the total amount of cash that needs to be available in order to pay every partner out the amount that they are supposed to get?
$49,000.
That's correct. So we need to, if we add up the 3,700 of Eaton, the 22,800 of Carrie, and the 22,500 of Arnett, we know that we need to have $49,000 of cash available. So now the next question becomes, do we have that much cash available? And you're not asked to do this in the question, and I don't think you have to do this on Wiley either, but I want to show you how this all works out in the end. So what I'm going to do is run through everything that's happening in the cash account so that we can see whether we actually have enough money to pay the partners. So the first thing that happens with cash is that there was already a balance of 5,000 in cash when we started. So you can draw up a T account for cash. Remember, cash goes up on the debit side, which means that the normal balance will also be on the debit side. So that's the quote unquote old balance, right, of cash that we had when we started. And then what we will do is look for any places where cash has been involved in a journal entry, and we'll go and post those journal entries to the cash account. So if we scroll right back up, we see over here in step 1, cash was debited for 75,000. So when you go down, you will put for the sale of all those assets, you debit cash for 75,000. remember why I'm doing this. If you spaced out for a minute there, I'm trying to see if I do actually have the 49,000 that I'm supposed to have to pay the partners.
Then you minus the 31 for the liability.
Correct. So now we go back up. Exactly. We go back up and we say, hey, cash wasn't involved in step 2, right? There's nothing there, but cash was involved in step 3, where we credited cash for 31,000. So yeah, we paid, right, the liability for 31,000. So we need to subtract 31,000. And those are the only transactions that involved cash up to now. So we have to see what our balance is. And the way we see that is we add up the plus side. So 5,000 plus 75,000 minus 31,000 equals, 49,000. So we have in fact correctly done our journal entries, because the amount of cash that the partners need in total is the same as the cash that we have available at this time.
But it doesn't necessarily have to add up every time, right?
Well, I was just going to say that. So you guys are in my head. I love it. So remember you asked a question before about what if there's not enough money or something. So if a partner ended up with a negative balance, like a debit balance, then obviously we would be short, and that person has to pay in to make everybody whole. So it doesn't necessarily have to be the case, but for the purposes of our work, we don't have to deal with deficiencies, that's what it's called. So you will add up to the same in your work. All right?
All right, thank you.
All right. So what does this mean? Right now we went through all this rigmarole and answered part B before we even finish part A. What this means is I now have the answer for how much each partner needs to get in the step 4 in order to pay them out. Remember, again, just going back to the literature, distribute the remaining cash to the partners on the basis of their capital accounts. So each partner's capital account will be 0 when we're done liquidating, right, the partnership. So in order to get to 0, if you have a positive balance of 22,500, you will have to subtract 22,500. So just to demonstrate this, so this is going to be like, this is the, let's call it the payout, right? The payout will have to be 22,500, because then eventually the balance will be 0. So how do we reflect that? Stop me if I'm going too fast. I don't want to lose you. This is the last part of this. You have to debit every partner's capital account. Remember, a debit will decrease the partner's capital account. All right, so you debit our net's capital account. Let me just go back here with 22,500. Carry also has to be debited so that their account can go down to 0. Debit their account with 22,800. Sorry, I left out the first letter of their name. I don't think it's a big deal, but okay, P and W. So P carry. And W Eaton, their capital account is going to go down by 3,700. And where does the credit go? Anybody?
Everybody, you mean where does the credit go?
Yeah, what's the credit account? What account will we credit?
Cash?
Total.
That's correct, cash. So cash goes down by the total of this. And of course, the total we already know, but I'll just add it up anyway, 49,000.
So no matter what we do, we always have to balance the debit and credit.
Yeah, I mean, that's just going to be the journal entry, right? It has to balance. And because we don't have deficiencies and stuff in our examples, you're going to see that whatever you're paying to the partners is going to balance with however much cash you have left over. So this step is going to be for some people the hardest step. So the floor is open for questions. Yeah.
This is definitely needs to get used to. Get the practice a few more times.
Yeah, we're going to do an example here in a minute. So I want to clarify, guys, there's no silly questions or dumb questions or whatever. I know we're on a call, so it might feel a little bit like less personal than if we're in class. But if there are questions on how we arrived at some number, ask me now. I'll open the floor. And then after that, I'm going to turn you onto an example that you can do yourself. Okay, so this is what we'll do now. If you're okay with it, let's take a quick break here, just a leg stretch. People maybe just want to review this thing until 12:05, and then when you come back, I'm gonna read example 12 with you, and you guys can then work on it. You know, with maybe you still need to get a piece of paper or book or something. You're going to follow this stuff that I was doing up to now and try to figure out the answers for this question yourself, but I'll be on the line to support. All right, so let's take a break until 12:05. Is that okay?
Yes.
Okay.
Yes. Okay.
Okie dokie. I'll see you in 5 minutes or talk to you in 5 minutes. All right, so it's 12:05. So I'm gonna start us back up. Some people may still be on their break, but I want to be mindful of the time we have together. So after having done example 13, I'm just gonna move into reading example 12 with you. You'll see it's a slightly different, I guess you could call it, presentation of the information, but the steps are going to remain the same.
Esther, you muted. Are you talking to us?
Yeah. Am I? Well, I'm showing that I'm not muted. Are you not able to hear me?
I hear.
I hear her too.
Yeah. So, Daya, are you? Is there something wrong with your sound?
I think she has to double check her internet connection just in case.
I could hear.
Okay. Is there anybody else who for some reason can't hear me? I hope it's not some buggy business now. Daya, are you good?
Yes, I can hear you now.
Okay, cool. All right, cool. So example 12, I was just saying that the information is presented a little bit differently in the sense that they didn't create a full-on balance sheet, but it's basically the same types of information, and you just have to use the same steps 1 through 4. So example 12, Farley, Green, and Hall are partners who share income and losses in the ratio of 5:3:2. So if you, I mean, you guys can already see this, but I'll just, at the risk of boring you, I'll just say 5 + 3 + 2 is obviously 10. So that works out because then it just means that it's going to be 50%, 30%, and 20%, right? That the split between the partners. So 50%, just again, if someone's joining late, 30% and 20%. Make this a little bit smaller, otherwise I can't have everything on the same screen. All right. On April the 9th, 2018, the partners decide to liquidate the partnership. On this date, each partner has a capital balance of 22,000. So they made this easy for you in the sense that every person just has the same balance in their capital account, all right? And remember, the capital accounts don't have to be, don't get involved until the last step. And the partnership has cash, so they already have a beginning cash balance of 11,000. Remember, the cash doesn't have to be sold or anything. You just leave it in the cash account. Inventory of 30,000, equipment of 27,000, accounts receivable of 7,000, and accounts payable of 9,000. All non-cash assets are sold for 72,000. So this is the same, like over here where it says they sold it for 75,000. That's the same information, except that now it's 72,000. So you will need this for step 1. You are required to prepare the journal entries for the partnership liquidation and prepare the capital account showing all relevant transactions. So this example is actually a little bit easier because there's no accumulated depreciation here. So I'm going to give you guys some time. I'm on the line. Anybody can ask questions at any time, depending on where you are in the example. But go ahead and follow the 4 steps like we just did. First, do the sale of the non-cash assets, calculate if there's a gain or a loss. Then you go ahead and allocate the gain or the loss to the partners based on the ratio 50%, 30%, 20%. Pay off your liability and then pay the partners whatever they're supposed to get in accordance with the balance on their capital account. Is that clear? Anybody?
Yes.
Yes.
Yeah.
All right.
Yes.
So I'm gonna, yay,
Yay.
hooray. So I'm gonna give you guys, let's do 10 minutes and we can kind of check in. Maybe some people will be done, some people will be stuck. Please, it's an open forum. If you are already getting stuck on how to start, just ask me. All right. I just have to apologize as you guys write. Don't let me disturb you too much. I have to apologize. A few people have been chatting to me while I was speaking. When I share my screen, the chat window disappears. So I have to be more judicious about actually popping the chat window out. So sorry if I'm being late to responding to you now, but I'm going to try and respond to everybody who's chatting to me over this window. Thank you.
Professor Francis, this is Debbie speaking.
Hi,
I
Deborah.
just, I just wanted you to know, hello, I just wanted you to know, right, that, to be aware of, like, I can't log in my school email for like, I don't know what reason. I did go, like, before time, like, to the office of LaGuardia, and they did help me, but for some reason, I can't remember what it was. But when I tried to do the password reset, like,
Yeah.
it still didn't let me go in. But I just want you to know that, I am taking notes and everything, but my question is that you are still going to, like, post everything on Blackboard, right? That we have to do, like, not on, it wouldn't be on the school email, right? Like, I have my personal email, but I do know, like, all the teachers, like, use, like, our school emails, like, they send the stuff there, like, announcements, reminders and stuff.
So yeah, so just to clarify, when I send stuff when I do an announcement, first of all, all my correspondence goes through Blackboard. I don't really directly email people's school emails other than as an additional reminder, to something that's already, because on Blackboard, because we have a system where I can actually email you guys directly. But anything that is due or anything that's going on, I'm first making into an announcement on Blackboard. And now the issue is, if you are saying that you can't get into your school email, then you won't necessarily get the announcement instantaneously the way the way the way you would if you were able to get into your email. So you'll just have to keep checking Blackboard, or you have to or if you send, I don't know if I'll always remember to do this, I'm a little bit scared to say this, but if you send me the email where you can receive stuff, I'll try to remember to forward the Blackboard thing to you. But again, I don't know if I'll be able to remember to do that. So your best bet is just to check Blackboard maybe twice a day or something.
Yeah, I do. I'm on it, like, every single day.
Okay, so then I think you're good.
And Wally Plus too, I'm always, on these school websites, like, I'm always on them to see what is due what day,
Okay.
Yeah.
Also, Professor Francis, for Wally Plus, right? for the reading, you know, has on the bottom of the assignments, those have to be all 100%.
No. For our class, because we were in person, I was never grading you on whether you completed your readings. I was only grading you on whether you completed the homework questions.
Oh, okay. Just wanted to make sure.
Does that make sense?
Yes.
Professor, for this,
Yes,
for number
who's
12, it's a
speaking?
little bit different. Tiffany Frederick.
Hi, Tiffany.
A little bit different than 13 as far as the accumulated depreciation.
Yeah, there's no accumulated depreciation, so you don't have to even bring that into
Okay, so
the
just
question.
continue.
Yeah,
All
that's
right.
why I was saying it's a little bit easier because
You don't have
you're basically just you basically debit cash with whatever the amount is, and credit
and credit the rest.
each of the other asset accounts, and then work out gain or loss.
Okay. All right.
But
Thank you.
No
what
worries.
about the capital balance, Professor?
Sorry, I can barely hear what you said. Something about a capital balance.
Yeah, what about that?
Those balances are only going to factor in at the end when you have to calculate how much money to give the people. So if you're talking about the capital balances that are 22,000 each, is that what you're asking me about?
Yes.
Yeah. So those ignore until step 4.
How about accounts receivable?
Huh? Wait, I didn't hear what someone's. Are you still talking to me?
Well, what do we do with that?
At the end, you're going to use that as the beginning balance to calculate to see how much money you should give the people. Remember, that's what we just did. I'm going to go back to what I was doing in the workings. And I've lost it. Oh, there's the chat window. Again, you can also send me questions via chat. I can't promise that I'll answer every question in a timely fashion. Do you remember when we were working on example 13, when we want to calculate right at the end how much money we should give each person? We put the beginning capital balance first, and then we put the gain or the loss to calculate how much we should pay them out.
Yes.
So that's why I said hold on to the 22,000 until step 4, because that goes into the calculations for step 4.
Yeah, I'm on step 4. I know the 22,000, but how about the accounts receivable? Like, do we divide it?
No. The accounts receivables gone away. Remember, in step 1, you sold it to somebody else. It's the only thing that comes to the partners out of step 1 is the gain on the sale. When you are posting to the partners, you only look for partners' capital names. Those are the only amounts that go into the partners' capital account.
Okay.
Right. So no problem. So that's a good question or a good point, guys. Anything that's relating to the assets that were sold in step 1, it doesn't exist anymore in the rest of the steps. So you don't have to divide that between the partners.
Professor, in step 1, accounts receivable and accounts payable is also included.
So not accounts payable. Remember, if you go back to what we
accounts
spoke.
Receivable.
Yep, it's going to be only non-cash assets. The payable will come up in step 3, the liability.
Okay. Got it.
All right.
Thank you.
No problem. All right, so I think more than 10 minutes have passed. So just to give people a sense of whether they're on the right track, let's just go over at least step one so that people don't carry on with potentially with incorrect numbers. So the cash that you receive for the sale of the non-cash assets is 72,000. So you debit that. Then you have inventory of 30,000 that you're selling, so you credit that. You credit the equipment of 27,000. There's no accumulated depreciation in this example, which makes it slightly simpler. Accounts receivable is 7,000 credit, and so your debit side adds up to 72,000, but your credit side only adds up to 64,000. So you know you still need 8,000 there to balance out the credit side. And remember, we said that credit is a gain. So there's a gain on sale or gain. The book sometimes calls a gain on realization, which means sale. A gain on disposal also means sale in this case. So a gain on sale of 8,000 you should have had. Does anybody have questions on step one? Is it reasonable for me to move on to step two?
Yes.
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 Three people are reasonable. Okay, let me just see if there's anybody asking me anything on chat before I move on. Okay, no. All right. Yeah, because also I just want to be mindful of the time here. So once you have the gain credit 8,000, remember step two is to allocate the gain between the partners based on their income ratio. In this question, it's 50%, 30%, and 20%. So gain is a normal credit balance. To get rid of the gain, you have to debit the gain for 8,000, and then you allocate to each partner what they're supposed to get. So this partner was supposed to get 50%, this partner gets 30%, and this partner gets 20% of the 8,000, right? So 50% of 8,000, obviously 4, 30%, 2,400, and 20% is 1,600. Questions there?
No questions.
Okay. Let me see if anybody's looking for me on chat. All right, no. Okay. Step three, a little bit of a relief, much easier to deal with than the other two, because all step three is saying is paying off your accounts payable. So accounts payable, normal credit balance, so you're going to debit it with 9,000 to get rid of the accounts payable to show that the balance goes down to zero, and you're also going to credit cash for 9,000. So notice that in step one, there's no involvement of accounts payable because you're only selling non-cash assets. Notice that, there's a whole separate step for paying off liabilities. So I'm going to give you another 4 minutes until 12:30. I know some people are done with step four, that's fine, but I think some people are still grappling with it. Just take 4 minutes. The people who are done can relax for 4 minutes. Take 4 minutes to try and still push your way through step four, and then I'll go over it. All right, so we have about a minute to go before I do the big reveal, yeah. Can someone who's finished just do me a favor and try to log on to Wiley Plus? I was trying to log on just to show the question that has to do with liquidations in your homework, but I'm getting kicked out of the site. It's just saying that Wiley Plus is taking too long to respond. Just let me know if you're having a similar problem.
Yes, I am too.
Oh boy. Okay, that's no good because at 1 o'clock we're having office hours.
Yeah, I can't log in either. It's
Oh
not letting me.
geez, I wonder if Wiley just crashed now or something. Okay, maybe in the next 30 minutes something will change. I mean, the whole world is I mean, not the whole world, let me not overstate it, but so many people are trying to use the internet at once that it's just becoming, I'm sure, overloaded. I'm just putting the office hours meeting ID again. I'm kind of feeling worried about these meeting IDs since I couldn't find you guys this morning, but hopefully we'll be okay. All right. So so that was step 3. So just to now go to step 4, I'll show the answer, and those who have the correct answer, you know, you're golden. But for those who don't, let's just go through step by step to see what's happened. So first of all, you have to remember that in step 4, we're paying the partners out their balances based on, you know, the remaining amount in their capital accounts. The capital account decreases on the debit side. We are decreasing the account because each partner is no longer going to be in the partnership, so the account goes down to 0. So Farley should get 26,000, Green should get 24,400, and Hall should get 23,600. And cash left over 74,000, so it's balancing out. Now the question is, how did we get to those numbers? You may recall that each partner has a beginning balance of 22,000, right? Per the question, each partner has a beginning balance of 22,000 on the credit side. And then the only time in our journal entries where we actually affect the capital accounts is when we are distributing the gain. So Farley gets a credit of 4,000, Green gets a credit of 2,400, and excuse me, Hall gets a credit of 1,600, adds up to 23,600 for Hall, 24,400 for Green, and 26,000 for Farley. My balance is already down to 0 because I'm just showing how we paid these partners out. So that's how these 3 numbers come about. You can also calculate them manually, obviously, if you want to. It's just like without doing the T account. I mean, it's just that in this question for part B, they ask you for the capital account, so you might as well just do that. And then with cash, you can see cash had a balance of 11,000. We received 72,000 when we sold all those assets up here, and then we paid out 9,000, so we end up with 74,000. So we do balance. And so that's step 4. So questions on step 4?
So, Professor, you just put balance 0 because they're both equal on both sides.
Yeah, because I'm saying I had a positive of 26 and I paid it all out. So my balance is going to go down to 0. This is like when I said if you withdraw all the money in your bank account, basically, you're going to go down to 0.
Okay, thank you.
No worries. Anybody else? Yeah, if you take some time to just review this answer and the one from before, you'll see that it's the same approach, right? And please remember that all the solutions for partnerships, and I'll go here to Blackboard, the solutions under Spring 20, solutions are already there on the partnerships, for the partnerships exercises, excuse me.
Wiley's still not working.
I just got in, but I don't know if I really got in. I mean, I got in on my phone, but who knows what that means, right? It may not mean anything. Yeah, it's not working on my computer, but it's somehow I got.
Yeah, it's still not working here.
Huh. Sometimes. I'll see. Yeah, I think it was a false alarm on my phone. It looked like I was getting in, but I actually wasn't. All right. So that's us done for now. I mean, we have 10 minutes left. I'm not gonna try to push anything more. I'll just give you the preview of exciting things that are coming on Wednesday, should you care to join. Let me just see if I can get there. So for Wednesday, if you also want to read ahead and whatnot, we're starting chapter 13, which is corporations. So I'll just open it from here because it's a little less rigmarole, because I have a Chromebook, so my Chromebook normally complains with downloads and stuff. So we're doing this, right? Corporations. We're going to be talking about what companies are, how they raise money through issuing stock, whether common stock or preferred stock, and what their balance sheet looks like. Also, when they do stock buybacks, which we call treasury stock, that's something that's coming up a lot now because all the airlines that are busy suffering potential bankruptcy had so much money before, but they used all their money to buy back their stock. So now they are in dire straits because they don't actually have money to tide them over during the decline in business. So we'll talk about corporations in chapter 13. That starts on Wednesday. Like I said, everything that you need is here if you want to start working on stuff. Obviously, you can also read about this in Wiley whenever Wiley decides to start working. And I will just look at the dates again for homework and so on to make sure that the dates make sense, that people have enough time to do whatever still needs to be done.
So chapter 13's homework is still for this Sunday, right? Or it's going to be moved?
No, I'll have to move it because I think, because I had to postpone, I'm just trying to find something. So talking and doing stuff at the same time is not a good idea. Because I had to postpone this submission to Wednesday, it's a little bit tight, because people, I mean, in general also we have such a crazy situation in any case with everybody's just not really up to speed yet because there's so much going on. So I'll definitely try to shift things if that's okay with everybody. I'm sure it is.
Professor, I was wondering about the exams. Will the due dates, everything will be pushed?
Yeah, so first of all, someone was asking me in chat if all the exams are on Wiley. Yes, they will be on Wiley. I already had set, exams to, even if though the exams are supposed to be 2 hours, I would set them for 3 hours just because of having to navigate Wiley to give people more time. But now I also recognize that some people's internet is acting crazy and whatever. So I'll just, whatever exams we have, I'll just put 4 hours so that you just have more than enough time that if your internet starts going nuts or whatever, you wouldn't be timed out. Just remember that the exams are timed. They're not going to be like this homework where you can come in and go out and whatever. With the exams, it's once you start, you have to finish it within, that window that exists. So I need to review. I wanted to see, how many people attend the call, and I mean the attendance was really great today. How many people are actually up and running and so on. So now that I know that we're relatively decent in terms of people being able to function during this time, I'm gonna look at all the dates again and try to see how I can shift them so that it's fair to you guys to be able to still do the work, in a meaningful way and in a time frame that makes sense.
And how many available attempts will be? Because Wiley Plus, sometimes even when you have the answer right, it gets you wrong.
Yeah, so I mean, I have to go back. I don't always remember these things off the top of my head. I think it's either 3 or 4 attempts. I mean, you have to, not that you guys necessarily have to feel for me, but let me just explain the rationale. I don't want to give too many attempts before deducting points, because sometimes people think they can just guess through the whole exam because it's, you know, semi-open book or whatever, but I don't want to encourage that too much. So I think I give 3 or 4 attempts. What I will say is, when Wiley's being really ridiculous, what people have done in the past, when they can see that they were really close to the right answer, but Wiley keeps marking them wrong, I can go in and manually adjust your grade for a question. So if you lose, you know, if you lose points because you showed the solution and your answer was correct, except that you didn't put a minus or something in front, then you can contact me and say, you know, Professor, I lost points. Is there a way to adjust this? But I would also just encourage you guys to please read the instructions. Like Wiley does say things like round to 2 decimals or round to the next dollar, show us, you know, a negative in front of your number. Things like that will save you multiple attempts. So often in red on the question, they'll give instructions about how you should round or how you should show signs on the question and so on.
And next time, will we use this ID, the second one? Which ID will we?
This was a spontaneous ID because of the whole fiasco today. I was trying while you guys were working on the questions to figure out if I could find a troubleshooting via Zoom to understand what happened today, because we were all using the same ID for the Monday class. I mean, it's the same ID overall, and yet I wasn't in the same room with you. And the irony is that I practiced with some of your classmates on Friday. We had a test score and we were fine. So I'm going to have to do a little bit of digging to try to understand what happened today. It's highly likely that I will have to reset the calls completely, because I don't trust the ID that we had, and this ID won't be applicable because it's one instance of a meeting that I just created on the fly because we were all struggling to connect with each other.
All right.
So I'll be in touch with new meeting credentials, and I'll try and see via Zoom, maybe they've got some information as to how on earth we could have all been using the same ID, but I wasn't in the same room with you guys. And I mean, I don't have a waiting room or anything like that. I allow you guys to join before me. Those are my settings, so there should have been no reason why we didn't end up in the same room.
Miss, I have a question. This is Debbie speaking. For the next time we do log on, which is on the next time we do log on, which is on Wednesday, for the Zoom meeting ID, right? You will have it posted up on Blackboard, right? So we could just check there and log on.
Yeah, I'll put it under the Zoom call materials, but I will also send out an email once I've been able to like identify what the issue is, because it's such a strange occurrence that I was kind of, you know, during the break and stuff, I was kind of trying to just through Google to see if someone else had this issue before. I just can't find it, and I just wonder if the system was overloaded, because I think we all joined this meeting instance. So I have no idea what happened. Something obviously went wrong. So I'll definitely have to just reset everything and send out new information. And I may even have to, I don't want to do this, but if it comes to it, I may have to do a new meeting every time if there's going to be an issue like this with recurring meetings. I'll have to see. All right.
Yeah.
Professor, I have a question. With the this is Tuba speaking. When we do the exam, the exam are going to be on Wiley Plus or Blackboard?
Yeah, it's going to be on Wiley Plus. Okay. So
and they're timed.
They're timed, but like I was saying earlier, they are timed. Normally I give people under normal circumstances where the internet isn't overloaded with all of mankind. I set the exam to take 2 hours, but I give people 3 hours because you kind of have to scroll and do all these things in Wiley that take time, and because you have multiple attempts. So I'll increase the time that you have by another hour so that you have 4 hours, which is basically double the time that you would normally have, so that, you know, if your internet starts running really slow or something like that, at least you have you know, a little bit more of a buffer to get you through the time. But I just want to be clear that I can, if someone goes in and accidentally gets kicked out or whatever, I have the ability to reset the clock for you. I have the ability to get you back into the thing if something happened. You know, I have a lot of admin abilities, so please don't hesitate to contact me if you have some type of problem while you're on the test. I can often preserve what you've done up to that point and then still let you back in so that you can finish if, you know, if the internet goes out or something like that. But I would also encourage you to not wait till, you know, the absolute last minute to get it done, because that's sometimes when, because of stress or whatever, we end up doing silly things and, you know, end up losing time because of that.
And it's going to be the same pattern that we're doing our homework with.
Yeah, so basically it's going to be the first test is going to be on chapter 13 and 14. I've assigned homeworks that are in line with the types of exercises that I would give you in the test. The test normally consists of 10 multiple choice questions and then exercises. So the stuff will look familiar. You know, the names and things might be different, but the types of questions are going to be the same, basically.
And you
Will we be
will
able to
provide review as well?
Sorry, what did you say, Tuba? And then I'll take the other question.
I said you will provide the review as well, right, before the test?
Oh yeah, so the week when we meet before the test, and in fact a week before the test, I normally have a review sheet that says this is going to be the exercises on the test or whatever, and we can go over it. But the syllabus doesn't build in an hours long review, but I'm not going to reteach the material, but I will go over the things, like I'll let you know what's going to be in the test. And remember, before each test there's also a quiz, like a 10 multiple choice question quiz to help you to just check if you actually understand the work. Okay. And if your quiz grade is lower than your test grade, then I just drop the quiz, so you don't have to worry, you know, too much. The quiz is more just to check in to make sure that people are actually studying.
Okay, all right, thank you.
Did somebody else have I felt like there was another question in there somewhere.
Yes.
Mm-hmm.
When is gonna be exactly the test?
Yeah, so I don't know if you've been on. I've been saying that now that we had our first session and I could see how it was going and people are actually attending and so on, I can go back now and try to rework the schedule to see you know, how we will do the dates. But what I can say is that the first test would only be after we finish chapter 14, which in my mind means that the first test would only be after spring break. Like when we would have come back from spring break, which is, you know, sometime in the teens of April. So we're going to track fairly close to where we were, you know, the times that we were going to test in the past, maybe just 2 days later or something like that. Does that make sense?
Yes.
First quiz was supposed to be 1 day before the spring break. Is it still on, or that's going to be pushed as well?
You guys have to give me a chance to look at the the schedule. Okay, like I said, I kind of looked at it, but I was worried that today, you know, if there's only 5 people on or 2 people on or something like that, then I had to go back and think things through about how to run this class. But since you guys have been so diligent to actually get on this call and you're getting on the calls, I suspect because we lost 2 days, that quizzes and tests would be available right through, you know, ready before spring break, but it would only be due probably a week after we come back from spring break, something like that. Does that make sense?
Good, thank you.
Yeah, so if somebody is like super in touch with all the work and you know exactly what's going on, you can take the test and the quiz whenever you want. The main thing is, like, I can make it available as early as before the spring break, but I will not require you. I mean, today's the 23rd of March. I'll need some time with you for 13 and 14. So I'm quite comfortable to make everything due after spring break, but it will be available to you during spring break in case you just want to get it over and done with.
So, Professor, the meetings, we're gonna do these regular meetings every class meeting, right?
Yeah, I'm going to try to do that. I mean, so far my internet has held up. It seems like most people's internet is holding up. I'm still recording the meetings. So if someone can't make it, you can find the recording afterwards. But I plan to be available to you at this time, 10:30 to 12:45, and on Monday, Wednesday, and then also the office hours, Monday, Tuesday at 1 p.m.
Let's say, for instance, we're not able to make the video, the call session. And I know you marked that as attendance, so we will be marked absent, correct?
Okay, so yeah, so here's the deal. And I'm just gonna speak plainly because I don't want we're in dire straits here in the world, so I don't need to act crazy or whatever in how I treat this. I'm taking attendance as one piece of attendance. I have decided that the attendance will be a combination of if somebody is actually there and if the work is being done. So say, Tiffany, on a particular day, you can't make the meeting, right? For argument's sake, something's happening in your house, something's happening to do with COVID-19 or whatever. If you are still completing the assignment, then I would still mark you as being in attendance. That's how it works for purely online classes. But I want to really encourage people to not use that as an excuse to not attend the meetings and only watching the video, because this meeting is here so that you can still connect with me and ask questions in real time. But I understand that I have to be flexible. So to recap, attendance will be taken on every call. If you're here, you're here. If you're not able to do the assignments or whatever, you're still marked present. If you are not present on the call, but you do happen to finish all your work on time, then you will still be present. Am I making sense?
Yes,
when
thank
you
you.
mean assignments, you mean YLA assignments, right?
Yes.
Yeah. Okay. Thank you.
Anything else?
Professor, so on Wiley, it's not all the homework. Some of that is also like on video or something.
Reading, yeah. So the reading and review is just the readings that I recommend if you want to be able to answer the homework questions. The reading isn't going to count towards your grade. So, I mean, I would always encourage people to read the textbook, because otherwise you're going to really struggle to answer the homework. But, if you're reading the book, maybe you have the manual book next to you or you're doing something else, that's fine. The main things that you should be focusing on is the homework. And then once I load all the quizzes and the tests with the appropriate due date, then that's the other thing that you would be focusing on.
But are you gonna post any more homework or just on the Wiley? I mean, like on Wiley, you already post a lot of like some homework until some chapter. Are you gonna post any more homework?
So Wiley has homework for chapter 12, 13, 14, 15, 17, and 18. That's the homework.
Okay. So no more homework done other that, right?
Yeah, I mean, the only other thing that still needs to be added onto Wiley is all the quizzes and tests, which have not been made available yet because I'm just still trying to figure out proper due dates that make sense.
So, Miss, once again, I just want to, this is Debbie speaking. So on the quizzes and tests, we will have, it's going to be timed, and we're also going to have like multiple attempts, maybe? It's one attempt, right?
No, it's multiple. That's what Daya was asking me. I think I can't remember off the top of my head, but all this information will be provided to you anyway. I think it's 3 or 4 attempts. I think it's 3 attempts that you have before you lose any points. And then by the 4th attempt, you're losing some fraction of points.
Okay, so if for whatever reason, are we allowed to save our answers and go back?
Yeah,
no?
I mean, what you but I mean, it's kind of difficult because you're basically you're making a submission, which is when you submit is when your answer gets saved. So you guys also have to be careful. I've had this in the past where
Yeah, that happened to me
people
once.
where
Then I
people do
submitted.
all the work and they don't submit,
Yeah.
and then everything is lost. So if you know
put, like,
that you have
single
multiple attempts, you can submit once after you do a question. It will reveal to you already what is correct and what is incorrect. And if you want to come back to it, you can come back to it. But at least if you submit, you already have something in the bank, you know. Whereas if you don't submit anything, it's lost, and then you have to start from scratch, which is, I mean, catastrophic at that point. But if that does happen, I mean, it's happened to students of mine during tests. I just reset the whole test for them, but unfortunately that means that you have to go back and do everything again, you know. So to recap, you've got, I think it's 3 attempts before you lose any points. Submit your work after the first attempt to see where, you know, what you are, where you stand, and then keep going. Is that okay, Debbie?
Yeah.
I still am trying to, I mean, whoever's on here, you can stay on. If I may still have to switch over though to the other meeting, because I gave people a meeting ID for office hours, but I'm still trying to see if I can get onto Wiley Plus, because some people are talking about how they're having issues.
Nope,
yeah,
I've been
like
trying.
the same thing here.
Sorry, what are you? Sorry, I didn't hear what people were saying.
Yeah,
time.
I still can't log in Wiley Plus.
Yeah, it's gonna make things a little bit tricky if we have to have office hours about Wiley Plus and we can't get into Wiley Plus. I'm trying to think if I downloaded if I may have to look in my files if I downloaded the questions somewhere so that I can at least pull that up to walk you guys through it. So maybe we can end this meeting now. It at least gives me 5 minutes to potter around in my work and see if I can find a copy of the Wiley questions. I suspect I don't have it, but I can try. And then we can meet anyway. I don't know. I'll see if I can't look at the textbook and remember which questions they were also. That's another option.
Screenshots of the questions from 1 to 5. I can email them to you if you need it.
Oh, that would be amazing. Thank you. Yeah, please do that.
Sure.
Okay, then I won't even bother to look at them. I mean, to look for them, because you have screenshots of the actual questions, right?
1 to 5.
Okay. All right. So then I'm gonna let us end this meeting now, guys. Thanks so much again for your diligence in joining. And I'm gonna cross my fingers and join the office hours call and hope that I'm not there alone again.
Yeah.
All right. Okay. I'll talk to you soon.
Take care.
Okay. Bye.